Hello, hello. Good morning, everyone, and welcome to another edition of Coffee with a Candidate. I am so thrilled that you all have been with us on this journey for these past several weeks, that you all have engaged with us in conversations, that you have helped us help others in the community, and that we continue to support each other through this pandemic and beyond. We don't know how we're going to continue, um, um, or if we will. Well, we will continue these sessions, but we have to be flexible. And this is a time now where flexibility and adaptability is key. And so, without knowing exactly what tomorrow holds or how we're going to do it, we continue to press forward, doing the very best that we can to stay connected with you, provide information that might be helpful to you, particularly now during this pandemic, and moving forward. And in doing so, I just want to say welcome to the coffee today. And today we have Wanda Young, who is with us, is a remarkable source of information as it relates to tax implications and tax implications of the stimulus packages, the unemployment, the small business that have been introduced, provided, and some of you may have received some of these monies from either the federal government or the state government. And so we're going to talk a little bit today about the implications of these payments, these funds, and what to kind of be mindful of as we're going forward. Now, I will say this, and probably Wanda will too. She's not giving tax advice. She's just giving us information about what to be mindful of, and how, if we have any additional questions, there are tax professionals who can help you make specific decisions about how your tax returns should be filed. But these will help you ask those questions, right? So Wanda, would you please say hello to everyone, introduce yourself, let them know your background, and then we can get into the conversation about taxes.
I sure will. My name's Wanda Young. I live in Union County. I am the county chair for the Union County Democratic Party. I also work at an accounting firm, and I've done tax returns since I was about 24. So I won't tell you how long that's been because you'll know my age, but I've been doing tax returns and working in finance for a long time.
Okay. And Union County, tell us what part of the state is that? Because we're in Northwest Arkansas. So where is Union County, just for
Union County is as far south as you could go before you get to Louisiana.
Oh, wow. Okay.
We're called Northern Louisiana sometimes.
Yeah. All right.
Union County turns into Union Parish in Louisiana.
Oh, wow.
So we're right on the border, south central Arkansas, right on the border with Louisiana.
So that's similar to the Texas and Arkansas border, where there's a Texarkana. There's a Texarkana, Texas, and a Texarkana, Arkansas. So you have similar situation there with Union County and Union Parish.
That's correct.
Well, thank you so much, Wanda, for joining us this morning and being open and available to sharing your information. A lot of times people think about tax and their eyes glaze over and they don't want to hear it, or it's scary, or you're hyper-vigilant about it, or you don't want to know anything about it. And, there are people who fall in all, areas of that spectrum. I'm personally one of the ones, went to law school, and tax was my least favorite class. All of them.
I understand.
It has not gotten better for me, but we realize those things that we are good at and those things that we aren't, and we lean on those people that are really good in those things and not feel bad about those things that don't come naturally to us. So
that's right. I call it job security.
That's right. Thanks. So thanks so much for allowing us to lean on you just a little bit as we learn a little bit more about the tax implications of these payments through the pandemic from our federal and state governments. So what we started off talking about unemployment. We started off talking about people who have received unemployment benefits, who've applied for unemployment benefits. Maybe they have in the past and maybe they never have. And I know the numbers, when we see the double digits, 20, 30 million Americans across the country who are first-time filers for unemployment, we know that this is a real economic crisis as well as it is a public health crisis. There are so many areas of so many of our social systems that are coming into play during this public health issue that we are mindful that there are a lot of things that need to be addressed. But before we get into that, with the unemployment, we were talking about if you filed for unemployment and you've received unemployment, there might be some tax implications from both the federal and the state level. Can you share a little bit about
Okay, so unemployment that you receive when you become unemployed, for about 15 years, that income has been taxable on your federal tax return. I'm sorry. That income has been taxable on your federal income tax return for about 15 years. Just in the last 2 years, the state of Arkansas, through state legislation, determined that unemployment that was received would be taxable on your state return now. So it's added to what other income that you may have for the year, and it becomes taxable. You pay tax on it. So I know that there's going to be many people who have filed for unemployment. They're drawing the state unemployment, plus they're also receiving the $600 federal pandemic unemployment. So you may have some people drawing anywhere from $800 to $1,000 worth of unemployment a week. You have the option of having federal and state income tax withheld out of that to offset any tax that might be due at the end of the year. But most people that I've talked to are not choosing that option because they need their money right now. But with the implications when they file their tax returns for 2020 and 2021.
And so it's really important to drive home that unemployment that is received on a weekly basis is considered income.
That's correct.
Tax treatment for income applies to this as well, including the extra $600 from the pandemic emergency unemployment.
Yes.
Okay.
And I've not been able to find anything that says that income would not be considered taxable. I believe the full amount that's received will be taxable, unless there's legislation. Unless there's legislation before the end of the year that states otherwise.
Okay. So you bring up a really good point. So that means, I think you are talking about some of the efforts that you have undertaken already to kind of address this issue before the end of the year and the tax implications of the unemployment payments. So we have the ability now to lobby our state representatives, our U.S. congressional and senators, those representatives as well on both the state and the federal level, to ask, to request, to advocate that these unemployment payments that were received during the pandemic not be taxable.
That's correct. I've actually emailed my state representative and my state senator and my congressman and our senators, our federal senators, and ask them this question: what implications are there going to be for the taxpayers in 2021 when we file these 2020 tax returns? This is going to be a double blow to people who have already suffered, economic
hardships,
unrest. Yes.
So there's no guarantee, but right now, as it stands, as the law stands on the books, it will be taxable. So let's make sure that everyone out there knows that there is an opportunity for us to flex our our independent muscles as it relates to advocating and reaching out, calling, emailing, writing letters to our state senators, to our state representatives, to our U.S. representatives, to our U.S. congressmen and senators, to say we don't want this tax. It's not fair to be taxed. We have suffered. It will cause a tremendous amount of suffering, I think, to
Right.
individuals who've had to rely on the unemployment benefits just to make ends meet during this period.
Right. And what I had called for in my communication with these uh, representatives is that we have a tax break from it. Obviously, it's not something that would continue in future years, but until we get past this pandemic and this economic unrest, have that taxability put on pause.
Now, so tell me then, so that people can be very, very clear, and hopefully we'll get you right back, Wanda. There you go. What's a tax break? So so when we are reaching out to our representatives, let's be really clear about what it is that we're asking. Because are we saying just for the time period that the pandemic benefits applied, that's the period that we're requesting that there be no tax implications for the unemployment, but if it preceded that period or follows it, then that's open for taxation?
It's something to consider, and it would probably be considered more thoughtfully if it wasn't so broad. If it was specifically during the period of this pandemic unemployment.
Okay.
So it would probably be easier to pass that type of legislation.
Okay. So that gives us a really good starting point as it relates to drafting letters that others can use, and we'll undertake drafting a letter that our participants and viewers can access, download, and send to their senators,
Yes.
Their state representatives, and U.S. Congressmen as well, asking specifically for that type of relief. And I think that helps to empower people and lets them know that let our legislators know that we're engaged and we're watching and we're mindful and we are paying attention to what's happening.
Right.
Now, do you have the opportunity to do this before November elections?
Right.
Okay.
Yes. I think that's where you can actually put the most pressure on our representatives is the fact that, we will be making decisions in November.
That's right.
For the people to represent us, and this is an opportune time to, put these type things before them. They pay more attention to us during an election year.
Gotcha. So we'll be working to put a draft form letter together, and that folks will be able to download and to leverage so that they can communicate directly with the representatives on this issue. So that's a fantastic point. Thank you, Wanda. The other part that's so interesting as it relates to relief, we were talking about the stimulus funds that were income based. So if you met the threshold and you got the maximum amount, whether it be $1,200 for an individual or $2,400 for a married couple. And so it was based on income. But you were saying, Wanda, that if throughout the rest of 2020, your income actually exceeds that threshold, even though it was based on your 2018 or 2019 income. But if in 2020 your income exceeds that threshold, you're gonna have to pay that money
back. From all accounts, my research, because I've had a lot of clients call and ask me this question: will I have to pay the $1,200 back? And for the most part, I think most people will not have to pay the money back. But from the research that I've been able to do through the IRS.gov and other organizations that are watching this, I get information from Forbes.com. They pay attention to the financial part of it, and several other places that they take these the CARES Act, these bills, these things that are passed before Congress and the House, and they try to apply it to future tax returns that you're going to be preparing. And I could not find any specific guidelines on the irs.gov, even though they continue to expand that information on a weekly basis. They do update that information, and we probably will have that information in the future months. But as it stands today, I believe from my research that there may be some people, when they file their 2020 tax return in 2021, if they exceeded the income levels that were allowed in order to receive the stimulus check, and they received the stimulus check in 2020, they may have to pay that money back on their 2020 tax return they file in 2021. For instance, if you have a couple files a married filing joint return, and in 2019, their income together, their adjusted gross income together was $148,000.
Okay.
Then they received their $2,400 plus $500 for any children that they had.
Right.
They filed their 2020 tax return in 2021, and they had a good year. And maybe they even drew some of this pandemic unemployment and maybe pushed them over the level. The cutoff starts at 150,000. The stimulus amount is reduced $100 per 1,000 over the limit of 150,000. If you reach 198,000, a married filing joint return, then you no longer qualify for the stimulus payment. Mm-hmm. So it's possible that a couple filing a married filing joint return in 2021, if they exceed that income, adjusted gross income of $198,000, but yet they received the money in 2020, they may have to pay it back with their tax return that they file next year.
Gotcha. So would they have to pay back, do you think, a proportionate amount, or do you think it's an all or nothing proposition?
I believe if it depends on what their income was. If they were $25,000 over the $150,000, then they would not be required to pay all of it back. It would be based on the reduction of it's like a table that reduces.
Mm-hmm. So it's a pro rata. The more you
yes, prorated. Yes.
Okay.
But if they hit that 198,000 adjusted gross income, then the 2,400 is no longer a tax credit to them, and they may be required to pay it back.
Wow, because that's interesting. You mentioned earlier that it's a tax credit.
It is a tax credit.
It's a tax credit. So there is some income dependencies relative to us being able to how we account for it on our taxes next year.
I do believe that we will have to reconcile that tax credit when we file our 2020 tax return. Mm-hmm. Anybody that received it will have to reconcile that tax credit to prove whether or not you actually were due it.
Wow. So to be mindful, everyone, make sure this is one of those areas that you make sure that you ask your tax professional as you're preparing your taxes for 2021, for 2020 next year, what implications, or maybe you can even ask now, to Wanda's point, there's still a lot that needs to be clarified. There's still a lot that needs to be defined. And there are a lot of questions. You talked about all the different resources and regulations and laws and everything else that you reviewed, and it's still unclear. So right. I think there's still going to be a lot of questions in the coming year as it relates to the tax treatment of the stimulus money. And I think you had mentioned that there was, because of the significant need, there was a tremendous rush to make sure that these funds were available. And so a lot of the formal rules and policies and procedures didn't take place. So that's why there are a lot of gaps in it.
Well, as I said before, we have politicians who make policy and pass bills and make laws. And when it comes to tax law, they make these proposals and these tax laws, and they pass this legislation, and then they put it in the hands of the IRS. The Internal Revenue Service is the driver for all of our tax laws and our tax codes and our tax regulations. So anytime a politician makes a tax rule or tax law, or they have an idea of what they want it to look like, how they want it to be once it receives the taxpayer, whether it's a tax credit, a tax relief, increase in taxes. But once it gets to the Internal Revenue Service, their job is then to write the code for it and to write the tax laws and the regulation. And then once they do that, they have to generate forms in order to be able to report and to make these calculations. So it's not as simple as just saying this is what we want to do. Then the IRS has to then take that information and make it into tax code.
Tax code.
And sometimes the intent may get muddled or even changed by the time it gets to the IRS. I've seen that happen.
Yeah. So this is really to share with everyone, not that you would then have working knowledge of how the tax code works or how all of these things work hand in hand, but to give you enough information to ask questions.
That's correct.
And start to inquire about what this means for you and for your family now and as you prepare for next year. Now we're talking about taxes now, and I know that the deadline has been extended. And it was automatically extended until I think is it August?
July 15th.
July 15th. Well, see now I'm so used to that ordinary extension, which is in August, but so July 15th. So we have to make sure that if we're in a position at that particular point, hopefully to be able to have talked or conferred with our tax professionals, our H&R Blocks and the Ernst & Youngs and all the green boxes and everywhere,
right.
To get an understanding of what that means for us. Now, we were talking that it's still challenging, even as states are reopening, as economies are starting to reignite, that there's still a concern from everyone, just a personal concern about what that means for them and their families, because even as the states open, even as restrictions start to lessen, I mean, coronavirus didn't check in with anyone and says, okay, I'm going right. So we still have to be extraordinarily careful and of our personal safety and for the safety of those that are around us and those that we are responsible for.
Right.
You were telling me a little bit earlier about not being able to see your mom because, with you being in the tax industry and having contact with the public like consistently, that you're mindful of that and really restricting your contact with your mother, who's in a most vulnerable age group.
Ronetta, that is so true. My mother, she's 85, and she's had every surgery that you could ever imagine that a person could have in her lifetime. She has COPD, she has diabetes, and she has liver disease. So she is extremely vulnerable. And so that's what drives our family's participation in this. We are as careful as we can be. Anytime I go out, I wear a mask. I do the hand sanitizer. I social distance. Sometimes I can get a little testy with people if they get too close to me. I try to explain to them it's not for my health's sake, but for my family members, my vulnerable family members. And so it is a challenge. It is a challenge every day to just try and keep myself healthy and safe so that the times that I do need to be with her and take care of her, that I can make sure she's safe as well.
Right. And the numbers are still going up. Let's just be honest.
Yes.
The numbers are still going up. And I think we cannot be too comfortable with our personal safety for ourselves and for our family members because restaurants are opening or barbershops, nail salons are opening. We still have to be vigilant. We still have to make sure.
I know for myself, for my husband, for my sister, for other people in my family who do have contact with my mother, we will not go to a restaurant. We will not dine in. we will not attend any gatherings where there are very many people inside. It's and until when, I don't know. I don't know. You know,
There's no certainty about
no,
when,
there's not.
medically emerge from this, from
Right.
public health, even as we address these other systems. We're still at our, we still don't know. Not
That's
something
right.
under control or ability to predict. And we were,
And that's something that I find myself telling people on a daily basis. I'm still getting phone calls from people. I had one client that his business has really suffered, and he called me the other day and he said, I just, do you know when this is going to end? And I couldn't tell him that I knew, because no one knows. This is something that we've not been through, not in my lifetime.
Mine either. Mine either. And you talk about his business suffering, and we were talking about salons opening and restaurants starting to open with reduced capacity. Uh, there were measures to help protect small businesses, and we were talking a little bit about that and the tax implications for the small businesses as well. You want to share a little bit about
So,
that?
absolutely. So our office, we have a small office here, but we do have a good sized clientele, and our clients are our family. And I know they feel that way about us too, but we prepared here in our office 25 of the Paycheck Protection Program applications.
Okay.
And I'm proud to say, of the 25 that we prepared, 23 of those were funded.
Okay.
Anywhere from a small amount of $3,000 to an amount of $350,000 for our largest client.
Mm-hmm.
And those funds were vital, and they will mean the difference between being able to stay in business or to close their business.
Mm-hmm.
One of the things that, of course, I'm always thinking about tax implications and what that's going to mean for the tax returns next year.
Right, right.
And so I've been doing research. I've had a couple of clients ask me, well, this money that we receive from the PPP, if you use it in the proper manner, in the parameters that's laid out, 75% is payroll, which means you have to keep your employees. You can't lay anybody off. But if you use 75% as payroll, 25% can go toward rent and utilities. Then within 8 weeks, then that potentially becomes a grant, and you don't have to pay that money back.
Right.
Okay. But my question is it free money, or will you have to pay taxes on that income when you file your 2020 tax return? I have reached out. Of course, you can't call the IRS now. I think they just in the last few days have opened up their phones again to where you can call them and you can have questions. But in my research, I've not been able to discern whether or not, if it's chosen to be treated as a grant, which means you don't have to pay it back, does it then become income that you may have to pay income tax on as a small business?
Definitely heard it referred to as a grant. Don't have to pay it back if it's used in the way that it is prescribed over and over and over again by our elected officials, over and over and over again. But what I have not heard to this specific point is, once it is classified as a grant and you don't have to pay it back, are you then subject to the tax implications for receipt of the 3,000 or the 300,000 or the 3 million that other larger small businesses may receive?
And the reason that I even mention the taxability of it is, I know through the agricultural program, there are many grants out there that are available to farmers. Okay. Some of those grants are considered income, and they are taxable. Some are not. And it just depends on how that grant was created. So that's something that I'm not real sure, when the CARES Act was prepared, if that particular implication was thought about, and where does it stand as far as when you get ready to file your tax return.
Right.
I read the CARES Act and I didn't see anything that addressed that.
Right. That's another open question, another open question. And I think for those who received funds from the Paycheck Protection Plan Act, need to ask those questions.
Exactly, because you need to be prepared to pay the tax on that if it's considered income. And also with the Arkansas grants that are out there, the Ready for Business grant that was rolled out a few weeks back. I actually don't know anybody that's received any of that money. I filed about 10 of those applications myself.
Well, that's one that ran out of money within 30 minutes, right?
Yeah, yes. And so they actually rolled it out before the money had really been appropriated for that program. The legislation later did fund the money and put some additional monies there, and they also tweaked it a little bit to where maybe some of the smaller businesses and some minority groups might be apply, where when they first rolled it out, it didn't have those parameters to it.
And we've talked about funds that were available to, the stimulus funds based on your income. And then there was the unemployment pot. And then there was the pot here for the Paycheck Protection Plan for the small businesses. And I think as a government, there were tremendous efforts to cover as many people in some way, not to make them whole, not to in some instances with the unemployment, there may be some people who are getting more now than they would have had they been working. And
right.
And if they get a fortunate, blessing, so be it. I think it's wonderful. I
feel the same way, Ronetta, and I just wanted to say that far be it from me or anyone else to be small-minded and petty about someone who might actually benefit. It's for a short period of time. It's not going to be forever.
Right.
And I for one am proud for the people that are able to draw the additional $600.
Mm-hmm.
They're not going to get rich off of it. Let me just put it that way.
No,
they're not going to get rich off of it.
No, they're not. And that if they're drawn, this is because they're in need. And even
That's right.
Give them a little bit more than what they were earning at their job, I think that speaks a lot more to the fact that we have so many people who are not earning a living wage.
That's right.
That to me reflects the inequities in some of the wage structures that we have for some of our workers who are considered essential workers, but don't make enough to
That's right.
of their everyday expenses. And
I agree.
41% of families who just don't, in the state of Arkansas, just don't make enough money to care for. To take care of their housing and health care. And that to me, that's the larger problem. It doesn't matter. Someone gets an extra $600 a week for a defined period of time. That if it makes up for the years of being underpaid, I say go for it.
That's what I think. I certainly don't begrudge anybody that could use the extra money to pay their rent, to finally be able to pay their utilities, and not go to bed hungry at night.
That's right. And hopefully we have more people being able to take advantage of that than not. I do know that the pandemic unemployment assistance system was compromised here in Arkansas. We had a tremendous lag in being able to get that system up and running. And so there's some folks that you spoke about earlier who haven't even received the money that we're even talking about.
So I had a client, him and his wife both are hairdressers and have a very successful salon right here in Union County. And mid-March, the governor had the executive order to close all hair salons, rightfully so,
Mm-hmm.
their income stream was cut off immediately.
Mm-hmm.
There was no immediate relief for unemployment because he had never paid it in. They were self-employed. We did file for the Paycheck Protection Program, but and he finally received money about 2 weeks ago. About 2 weeks ago. So there was a period of time there where he had no income coming in, and he basically had to live off his credit cards for a couple of months.
Yeah.
So it was tough.
That's part of the challenge. And what if you don't have the credit card that has the limits that will allow you to
Absolutely.
charge your living expenses for 6 weeks?
Absolutely.
We've seen how this has impacted the food supply, how folks who've never had to rely on food banks or food pantries are lining up and continue to do so. And I know that there is still a need, even as the economies are starting to open and shops are still opening. People still feel a little wary. And so until there's public confidence to be able to frequent those businesses, go to those restaurants and to sit down in them and to go to, these other businesses, it's still going to be challenging.
That's right.
To start the economy. And so those business owners are still going to be struggling for a while, I do believe.
Well, we have one particular client who he has a rather large restaurant, and most of his services dine in, and some buffet, which they still are not able to do that yet. But his challenge now is that their capacity is limited, and even at 50%, he cannot make enough money in a week's time to pay for the food, the employees, and the rent. So there's still going to be a gap there. He is still going to need some sort of assistance. And he was one of those small business owners, a restaurant that, generally does not have large capital, that, he could not afford several months of no income. So it's going to be a struggle, but he gets up and goes to work every day. So,
well, I have heard of other restaurant owners who just can't afford to open. To your point, 30
right.
or 50% have just made the decision that they're going to remain closed until they get the all clear to open up 100%, because to do so otherwise, it's a financial hardship.
Right.
Yeah. So, any good news on the horizon, Wanda? We've talked about tax, and this is another reason tax is hard.
It is hard,
and and it's something that we need to be aware of. But any good news here with the folks that have tuned in today about the tax implications, about any of the funds that they may have received? I mean, the receipt of the money is good news.
Right.
Else?
I think the good news is, this is what I think we can look forward to and keep our positivity going, is number one, I'm alive and you're alive.
That's right.
And my family's safe. So that's always a plus. And I have seen, as bad as things have been, I've seen an outpouring of support from people who have to people who don't have. And that always makes me feel better, just to see. I always said, when you're faced with crisis and the things that we're faced with right now, the good people get better and the bad people get worse. Wow. But I've seen a lot of good people do a lot of good things, and that encourages me. And also the fact that I see in Arkansas so many wonderful candidates running for office that made that commitment before we were facing this crisis. But people, I believe, who really have the heart for the people, and I think people may pay a little more attention to the politics. I always say politics is personal, And how can you be more personal than your health and safety and your financial safety?
That's right.
So it becomes personal to us. So I'm encouraged about the future just because I look around and I see people helping people, and I see great choices that we're going to have to be able to make in November. That's what keeps me going every day.
Well, thank you so much, Wanda, for that ray of sunshine. And you're absolutely right. We have now, I heard someone use this phrase, never waste a good crisis. And, but it's what it speaks to is that there's opportunities to improve. There are opportunities to make things better because we see what's broken and we see who it impacts and we see that we can do better. And what I think is tremendous is that, like you said, it's personal. And so there won't be a person come November when we're talking about this, or come at any other point in time where we can't look back on this day and think about ourselves, our neighbors, our families who were impacted, and how
Right.
and how it touches so many. And this isn't a situation where folks who aren't, who lack the energy or the motivation to go out and get a job or to pull themselves up by their bootstraps. This reflects that at any point, any of us can be impacted and need and be in need. And so if that's the case, then we should make sure that our systems, our services, our elected officials are focused on the needs of the entirety and not just on the few. And so making sure that we can elevate all will be critically important.
I agree. This gives us the opportunity to shine the light, and we have people paying attention where they may not have noticed before.
Right. That's right. I said it earlier, and this pandemic didn't break our systems. It reflected and highlighted the systems.
That's right.
Broken. And so we now have an opportunity to fix those. So thank you so much, Wanda, for your expertise. As much as, tax is not, a favorite topic of mine, you made it interesting, you made it engaging, you made it personal. And it's something that we all need because it's an important topic. Thank you for your words of positivity and the encouragement that you have seen, that you're sharing with us. And I hope each and every one of you out there sees positivity, that you are encouraged by what you've seen out in your communities, through what Wanda has said, through what we're doing here, that you're sharing that positivity, because when you share positivity, it multiplies. And so
yes, and I've always said, if you don't see someone doing good, then do good.
And you do it. That's right.
That's right. Then you do it.
That's right. So if you all have any questions or comments for Wanda, I hope you're writing them down in the comment section, and we'll get to those and we'll respond to those. But we just want to say thank you so much, from the campaign, and from me personally, Wanda, thank you so much for your time today. Thank you, each and every one of you, for tuning in today and for being a part of this journey. Thank you for your support, and we hope to have the form letter that we talked about, posted really quickly, and you'll have access to be able to share it with your representatives as it relates to the unemployment and the tax implications for those unemployment payments. So with that, I will say goodbye and have a wonderful, wonderful rest of your day. Thanks.
Thank you.
Mm-hmm.